I am joined by Jay Shabat, founder of Railroad Weekly and Airline Weekly. Jason is an expert and an industry specialist on airlines and railroads, as you can expect from those titles. Jay, great to have you here. Welcome to Forward Guidance.
Yeah, thanks, Jack. Great to be here.
Jay, let's start off with airlines, because I think a lot more people have been on an airline than a sort of a freight rail car. How would you describe the health of the U.S. airline industry? Let's start domestic. I know it was a crap show in 2020, and it gradually became less so. Is it fair to say that business is booming right now, and what might that indicate about the broader U.S. economy, or is it kind of not super representative?
Yeah, I mean, I don't think it's super representative, but I'll say a few words about the current state of the airline industry. And I think your characterization as, a crap show in 2020 is perfectly accurate. It's the worst year in airline industry history because of the pandemic. 2021 was a little bit better, but not much. And then 2022 was very much a comeback year. Wasn't spectacular financially, and I can give you some numbers on that just to give you, and I guess I do cover airlines globally, but for this conversation, I guess we'll stick with the U.S. airlines, and feel free to follow up on anything international. But so there's 11 sort of major U.S. airlines are all publicly traded, and they earned a collective operating margin of about 4% in 2022, which is it's not going to blow anybody's roof off, but it was an important comeback year. There were some kind of strange anomalies about that year. Now, in 2023, the airline industry, the U.S. airlines in particular, have three very big tailwinds. One is that the price of fuel is down quite substantially year over year. That was a big problem in 2021, not so much a problem in 2022, not so much of a problem in 2023. The other big tailwind is that demand is just gangbusters. It's never been this good. I mean, just Americans getting on planes everywhere, domestic, international, you name it. It's hard to find markets that are weak right now. I can tell you a few, but there's not many. And then the third thing is that the supply situation is very constricted. And that has a lot to do with some of these supply side, shortages that you hear about, supply chain issues. Boeing and Airbus are having difficulty delivering planes. The engine makers are having difficulty with some of their technology, some labor issues, some of the things you've been reading about in the news about how, some of probably people watching this have been stranded at airports over this, recently. That has to do with air traffic control shortages. A lot of it does anyway. But because of those supply issues, that is helping to push up the fares, helping to push up yields, which in turn is pushing up margins. So it should be a good year.
So demand was somewhat booming last year, but financially profits were not that high because the price of jet fuel was high, which is very related to the price of oil. Price of oil went to $120. Now the price of oil is down, but demand, as you say, is perhaps even more gangbusters. Can you just give us some numbers on whether it's, the amount of miles flown, the amount of revenue, what is it, revenue per average seat mile, you tell us. And then also tell us about the profitability, because I know in, let's say, 2020 and 2021, people said, okay, travel is going to come back and it's going to be higher than it is now because it's at a so artificially depressed level in 2020. But the business travelers aren't going to be there. People aren't going to take a flight from New York to Chicago just to shake someone's hand. They're going to do that over Zoom. That business is dead, or it's partially dead, and that is where all the profit is in terms of the margin. How much has that prediction played out, or is that not accurate?
So let me first respond by talking about the business, or sometimes we call corporate traffic. This is the very big companies sign contracts with the airlines where, we'll fly X million dollars worth of, flights. You give us this discount. You allow us, our employees, to upgrade to first class, that kind of thing. So as you mentioned, that was a very, very important segment of the industry, which is still down in volume terms, maybe 20% from where it was in 2019 pre-pandemic. However, in revenue terms, it's about even, or perhaps even in some cases even up.
And that's business travel, like business class, first class?
No, we're not talking about the particular classes of service here. I mean, it's loosely correlated, but I'm talking about people traveling for the purpose of business.
Got it. Okay.
And specifically people that are working for these bigger corporations, like not, I own a small 2-person, company and I'm flying for business. Not really counting that. That's actually very healthy. kind of individual, small business travel, small and medium enterprise. That stuff's very healthy. The stuff that's really down is the tech sector. Like if you look at a company like Alaska Airlines over on the West Coast, they're actually, despite their name, they're based in Seattle. A lot of their travel is, Google, Amazon, as you'd expect, West Coast corporate. They're feeling it the worst because, as you imagine, these IT companies, they're, going to be most inclined to do video conferencing, things like that.
Mm.
But even there, I mean, even Alaska's doing fine because, yes, the corporate volumes are down, but whatever corporate is there, the prices are up, the fares are up, and then on top of that, the leisure is so strong. So it's not a very big. I mean, still open question of how, to what extent that corporate travel comes back, even in volume terms. But right now, it's not that big of a depressing factor. It's the airlines are fine with it.
And so, just in terms of broad numbers, what does total flying look like relative to 2019? Which is the best barometer, and I think it's what's called TSA throughput, of like how many people went through the TSA check every day.
Yeah, there's different ways to measure. So TSA throughput is the volume terms. You could also measure in capacity, like how many seats the airlines are flying. We're pretty much back to 2019 capacity now. Some airlines are way ahead. I mean, if you look at a low-cost airline like Frontier Airlines, Spirit Airlines, they're much bigger now than they were in 2019. Then there's a few. I think Delta's the biggest laggard. They're still a little smaller. I don't know the number off the top of my head, but collectively across the whole U.S. industry, we're probably close to equal in terms of capacity, in terms of volumes, airport volumes. And then, of course, that's going to vary a lot. You're going to have some airports like in booming Austin, Texas, where, much busier today than 4 years ago. And then you're going to have, other airports. I can't think of one off the top of my head, but there's others that are, Philadelphia, for example, maybe a little more struggling to come back because of different things that different strategies of airlines have taken in different places, that kind of thing.
So if the throughput people going through is roughly the same as 2019, is it fair to say that demand is actually the same as 2019? It's just that supply is less, so that demand is booming relative to the expectations of 2020 and 2021, when everyone thought, oh my God, airplanes, who needs them?
Yeah, I mean, I think when you talk about the strong demand, don't think of that as extreme volume growth. Think of it as extreme, well, I won't say extreme pricing growth, but the unit revenues, which is a good way to measure fares, they're up substantially. And then there are certain markets. I mean, this summer, go try to book a ticket to Europe this summer. Much more expensive than it would have been, all else being equal, than it would have been 4 years ago. So yields is another way of measuring. That's just what you're charging to fly one seat 1 mile, or sorry, one passenger 1 mile. It's just much stronger now than it was 4 years ago, pre-pandemic. And a lot of that, as you suggested, is supply side, but it's demand as well. People want to get out.
Got it. So I'm just looking at the, it's a very macro way of doing it, but airline fares in US from the Consumer Price Index. And so in May of 2022, it was about 50% higher than May of 2021. So substantially higher. So profits are higher, it's fair to say?
No, because that's just that's the price index, and I'm not exactly sure how the Bureau of Labor Statistics does that. I know the Bureau of Transportation Statistics kind of looks at that as well, and it's not something. It's very difficult to measure airfares because it depends on what you're including, at least in the aggregate. And honestly, I don't know off the top of my head how the BLS does it, but to directly answer your question,
Yeah.
no, it doesn't necessarily mean just because a fare index is up that you're going to be profitable if your fuel is way up as it was in 2022. So it's just a combination of all those forces. But yeah, on the fare side, on the demand side, it's a very good picture right now for sure. Now everybody's waiting to see is how long is this going to last. Traditionally, in the fall after the peak summer travel, kids are back in school, all that. Typically, things start to soften. There are no signs of that yet. I mean, anecdotally, I'm starting to hear that there are, but we're going to find out a lot more. So next Thursday is the beginning of second quarter airline earnings season. So Delta kicks things off on Thursday. that we'll have over the course of the next 3, 4, 5 weeks, we'll get a much clearer picture of how the bookings. One thing nice about airline demand is you kind of can see the future because bookings are coming in constantly for future travel. So airlines already know how the fall is. They know completely because some people book at the last minute. But we're going to already have an idea of what things are going to be looking like, and we'll find that out in a couple of weeks.
And what do you think demand will continue to be? I mean, do you think demand will continue to be as gangbusters as it is? And if you don't have a strict forecast in a crystal ball, what factors might you be looking to, such as, oh, there's a correlation between the economy and excess savings, work from home, other types of things? What factors would go into that calculation?
So there's absolutely a correlation with the economy. You know, I watch your show all the time, Jack, and it's guest after recession is coming, and it just it doesn't. And to me, it's not terribly surprising from what I can see. Fuel, gas prices are down, job market's still healthy. I mean, even I've heard guests on your show say that even the fact that the Fed is increasing interest rates, maybe that puts more people in the pockets of people who are saving money. That's spending power. On top of all that, you have a lot of fiscal stimulus still floating through, and that's on the railroad side. I see a lot of that. Railroads carrying materials for these huge construction projects that are going in with, federal stimulus money, semiconductor plants, auto plants, all sorts of stuff. So, it's hard for me to see any spending deterioration or a recession coming. Now we all know, the risks inherent with the higher interest rates and all the other risks that are out there. So it's certainly not a slam dunk, but not seeing yet. Now there is a possibility that perhaps we're just going to, divert back to the mean where things were, kind of as they were in 2019, and you had this huge depression, and now you kind of have all this like revenge travel or makeup travel that everybody wants to get on an airplane. Maybe they're getting it out of their system, and then come the fall, maybe it's next year, and things start to sort of normalize. That nobody knows. But as of right now, it still looks pretty healthy. And I think the airlines will tell you that as long as the supply situation remains as it is, which, we're looking like that's a multi-year thing, based on what we can see of Boeing and Airbus and just their inability to deliver planes, that in itself is because it's going to last a while. I think airlines are generally feeling pretty optimistic about the next couple of years. Yeah. Who knows what's going to happen in fuel? Now, the thing we haven't talked about, so fuel is generally the single largest cost item that an airline will have. It kind of runs neck and neck with labor. Now, on the labor side, labor has been very inflationary. So, we talk about how the economy is challenged by inflation. Well, in a sense, the airlines don't have that challenge because fuel price has been very deflationary over the past year. However, everything non-fuel is what you read about in the newspapers. Labor costs are up, airport costs are up, material costs are up, all that kind of stuff. So that is another wild card. Airlines are facing. I mean, Delta just signed a very, very expensive new pilot contract, and American, I believe, has one out for ratification right now. United and Southwest pilots are clamoring for their deal. They're going to get something similar at some point. So there's that to consider as well.
Yeah, just going back to the point about everyone calling a recession. I mean, I think Bloomberg had a 99 or 100% recession forecast in this fall of last year. I saw a really funny tweet the other day, something like, "Honey, we got to cancel our trip to Disneyland because there's an inverted yield curve."
Yes, right. I mean, you've got all these signals that are saying, recession, and it still might be right, but certainly from the airline perspective, there. Now I should also say that, in 2021, let's say, and at this time during 2021, I was actually writing a newsletter about the U.S. economy called Econ Weekly, and it's econweekly.substack.com. You can check out my old stuff on there, but it's pretty much every industry in the United States was booming. I mean, if you go, everything from agriculture to, the computer chip companies to the, housing was booming and all this stuff. But the one thing that very much wasn't booming was, of course, travel and leisure. Now that's kind of flipped, where travel and leisure is kind of at the head of the curve, and housing is slumping, and whatever, IT is slumping.
Although housing was slumping, there's some signs that it's not slumping anymore, though.
I have seen the recent housing starts look pretty good for last month. So who knows? Yeah, maybe even that's coming back. Maybe there's no landing, no, whether hard or soft. Maybe we're just maybe we'll just stay aloft like an airline, like an
Yeah,
airplane.
exactly. That's the real higher for longer, is this the airplanes. So what was I going to say? Is there any compositional things of interest with regards to regular class, business class, and first class? And I know it's even more complicated now because you have all these fees. But if you say in a very good recession, in a very healthy economy, a lot of people are flying first class, whereas when people are really watching their wallets, like no one's flying first class. Are you seeing anything there relative to 2019 or before across the airlines that is of interest and might indicate something, or not really?
Yeah, so the premium segment is very, very strong right now, and no signs of that letting up, which is kind of, it almost seems a little counterintuitive, because you would think, well, if the corporate travel is down, like I was talking about, those are people who traditionally buy the first class seats, the business class seats. But a lot of company, or a lot of individuals, just I don't want to say wealthy individuals, but just people with disposable income, that are purchasing upgrades, or outright buying the business class tickets. So airlines are actually expanding their premium cabins. They're adding more premium seats. Not all of them. Everybody has different business models, but there are three giant airlines in the U.S. Maybe say intercontinental airlines, and that's Delta, United, and American. And they're all pretty much they're seeing the same thing. Premium is doing great. And because little bit more of a complicated discussion, but roughly speaking, because of these supply constraints, the airlines don't have to fill as many seats. They're kind of, Delta especially, kind of taking the approach like, we don't want to sell Honda Civics anymore. We want to sell BMWs. And so they're really going after the premium traveler. And don't confuse that with business traveler, but people with
Yeah.
disposable income. And, there's that stat out there, what the baby boomer generation is sitting on $75 trillion in wealth. There's really kind of a concerted effort to go after that money. And so there's that. Now, having said that, I mean, if you've been on a flight, the leisure the back of the planes are also very full right now, and the airlines that specialize in low cost travel are doing just fine. Your Frontiers, Allegiant Air in the U.S. is the most profitable airline in the U.S. It's been that way for a long time. Very
Really?
unique business model. Much smaller than a Delta or American, but they're doing fine as well. So.
And it's a little surprising to me, given let's say there's a 7-hour flight, regular costs $300 and first class costs $1,000, business class costs $1,000. It's like a $700 premium for 7 hours. So it's like you're kind of, by not flying first class and getting the regular seat, you're kind of making $100 an hour. It's pretty interesting to me that a lot of people go pay so much more for something that I don't know if it's worth it, just personally.
Yeah, and traditionally, like I said, that's usually not your money. That was your company's money. So they, and the theory is, okay, the company's going to pay if the employee's going to get a better night's sleep or whatever. And it's you mentioned 7 hours, which is more or less the cutoff. 7 hours is about Europe. Um, if you're going to Asia, that becomes even more valuable from the United States. So, and then there's just a ton of travel going on now between, we've seen over like the last decade and a half, just a lot of these ultra long haul journeys have started to, things going through Dubai to Australia, and, Singapore to this and that. So, yeah, I mean, people will pay for that. And increasingly, like I mentioned, what we're seeing post pandemic is increasingly people are paying for that out of their own pocket. I want to go to Europe this summer with my spouse, and I'm just going to pay the extra, $1,000, or I have miles, and I'm gonna, these mileage programs are are huge profit centers for the airlines. Very, very big cash cows. In fact, Skift, my employer who publishes Airline Weekly, we actually put out a recent report on loyalty programs. You can check that out. But yeah, very big, especially in the U.S. True abroad, but more so in the U.S. And they basically, it's simply put, Delta will go and sell the miles to an American Express, for example, so that they can use it for their customers, for their credit cards. And Delta will just, I mean, that's a $2 billion $3 billion relationship or something. It's huge money.
Sorry to interrupt. Wanted to let you know about Blockworks' upcoming crypto event, Permissionless 2. This ultimate DeFi gathering will be taking place in Austin on the 11th to the 13th of September 2023. It will feature the very best discussions on ZK tech, rollups, account abstraction, MEV, and much more. All the big hitters in crypto are going to be there, so if you're into crypto, you need to be there too. To get a 20% discount to a full 3-day pass to Permissionless 2, click the link in the description and use code GUIDANCE20. That's GUIDANCE20. Thanks, let's get back to the episode. Tell us, so we've covered domestically, it's was very weak and now is very strong. What about international? I know for 2020 it was exceptionally anemic, and then in 2021, even go from US to China, it was not at all really not much business there at all. What does it look like internationally now? Because a lot of flights are international, right?
Yeah. Mm-hmm. So the everything to Europe is totally gangbusters. I mean, Europe is this is going to be the best transatlantic season ever that the airlines ever experienced, and some of that has to do with some of the European airlines have taken out capacity. So it's not just a demand situation; it's a supply situation as well. But it's just going to be a very 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 good season on Europe. So then you have Latin America, also very good. I mean, there's, you could break these markets down into different sub-markets. So there's sort of short haul South America / Caribbean. A lot of that is leisure. Down into the Colombia, for example, that a lot of that is, people immigrants visiting or, visiting your family down there kind of thing. Then you have the deep South America stuff, Brazil, Argentina, Chile. All that's doing very well. Asia's starting to come back a lot. I'd say about 4 or 5 months ago. Now, remember that a lot of these markets, particularly Asia, but even some European, a lot of these markets were largely closed until relatively recently. So Asia didn't really start opening up until the end of 2022. And then in China, I think it was just the beginning of this year.
And China is a huge percentage of travel, right? And from Asia.
Well, not for the US. So for the US, China is a rather negligible market. It's so Delta, American, and United are the only 3 airlines that fly to China, and it's just not that much capacity. United pre-pandemic was flying. You can imagine they have a hub in San Francisco, so they're flying a lot of tech travel to. Apple has a factory in Chengdu, for example, out in China, in the middle of China. So that was good business for them for a while, but it's nobody's really getting hurt that much by losing China. The U.S. guys. Now, China is the second biggest market in the world in terms of total air travel. A lot of that is domestic. A lot of that is outbound China going, Chinese tourists visiting Thailand, or, Europe is starting to come back as well. Another little quirk about why the U.S.-China market is still very depressed is that, so a lot of these markets are governed by bilateral treaties. So you're allowed to fly this many flights to my country. I'm allowed to fly this many. So that is very restricted right now. And one of the reasons the U.S. and China can't agree on many things these days. They can't agree on the number of flights, partially because of this Russia overfly situation. The U.S. airlines are not allowed to overfly Russia. Chinese airlines can. So getting between most U.S. and Chinese destinations, the quickest route is over Russia. So the U.S. airlines are saying, hey, that's no fair. And so the State Department is, not, they're a little bit, they're holding out on that. So that market, but China is very much an anomaly. Japan is starting to come back. Some quirks there too. A lot of outbound travel to Hawaii, for example, is one specific, Japanese tourist to Hawaii.
But the yen's super weak, so it's good for American tourists, or non-Japanese tourists, but bad for Japanese tourists.
Correct. So Hawaiian Airlines is an interesting case study, and that's I don't want to get too much into specifics here, but for this program, but the Hawaiian Airlines is a very interesting airline, doing fantastically well during the 2010s, having a really, really, really rough time right now because Japanese tourists are just not coming. They're not coming because, as you said, the yen's been very weak. Probably other reasons too. A lot of Japanese have been just traveling domestically. There have been some government incentive programs to tour at home and things like that. But that's a very specific example. To go back to the original question, though, international minus these, China, a few others, very, very healthy right now.
Very healthy, with the exception of U.S. and China.
Yeah.
Got it.
Mhm.
Okay, thanks. So we're
And
going to get
again,
to the
that's
rails.
not a big market. I just want to stress that U.S. China is not a big market
Got it.
for the U.S. carriers. It's just not that important.
I didn't know that. Thanks for laying that out. Okay, so for the railheads out there who are like, okay, this airline stuff, it's okay, but I want to get to the rails. Don't worry, we're going to get there. But just a few final questions about the airlines is, can you just outline how historically airlines have been a very bad business? And you actually wrote a book, Glory Lost and Found, about Delta, about how Delta's tried to struggle to overcome after these barriers after it went bankrupt. But is it fair to say that historically most airlines have gone bankrupt?
Yeah. So Glory Lost and Found was, as you mentioned, that was a book that I wrote about Delta Airlines and their experience going through bankruptcy. They Delta, if you go back, decades, 1950s, 60s, they were always a very, considered one of the best airlines, one of the most profitable airlines. They ran into a ton of trouble after 9/11, as did many airlines. They had a few unique challenges, and they went bankrupt in 2005. Then in 2008, they merged with Northwest Airlines and really created a very strong and durable company that's pretty much been profitable ever since, even through the 2008-09 recession, which was a very bad one. They did lose money, but it was mostly about hedge losses, whatever. You take away those special items, and even then they did okay. So U.S. airlines are much more resilient now than they used to be. Now, having said that, it's still a very capitally intensive industry. It's a very labor intensive industry. You're constantly subject to anything. I mean, you read the news, and anything that goes bad in the world, it's the airline's problem. It's a pandemic, fuel shock, recession, whatever it is. So it is a very, very difficult business. Now, there are a couple of reasons why the U.S. airline industry, in particular, has become more resilient. I mean, when I started writing about airlines in 2000, I mean, I started working at U.S. Airways, the old U.S. Airways, which is now American, back in 1996.
Oh,
So yeah, and I started writing Airline Weekly in 2004, and back then the airline was an absolute mess, partly because it was so fragmented. What's happened over the course of time that's become more consolidated. When we get to the railroads, we'll talk really about consolidation, but we've had about six, I believe, very, very large mergers over since about 2005. I mean, U.S. Airways America West was 2005, and then there was a bunch of them since. We can go through them, but there was a bunch of really big ones. So we're down to really just the three intercontinental giants. Southwest is the biggest domestic airline. Then you have Alaska and JetBlue is actually trying to merge with Spirit, subject to regulatory review. Big question whether or not they'll be approved. But that would be add another round of consolidation, help kind of firm up the industry's earnings. And then you have your low cost carriers and whatnot. I think I said there was 11 airlines in all. You have some regional airlines on top of that, but that's a different business model. So yeah, that's consolidation is probably the number one reason why airlines have been able to, minus the pandemic, which is a very unusual shock, have been able to bring. I mean, throughout the 2010s, U.S. airlines are consistently profitable, particularly the second half of the 2010s. And there have been other reasons, charging for ancillaries, the fees that everybody hates, the bags,
mhm.
and that's been very, that's fallen to a lot of that's fallen to the bottom line. That's been very helpful. Um, Industry with a lot more capacity discipline in the past, joint ventures. So now, if Delta's flying to France, they're not doing it on their own. They're doing it with Air France, so they can use Air France's sales, resources on the other end to sell tickets to so it's a lot. There have been quite a few reasons why the industry is more resilient. Now, if this discussion were to move to other realms of the earth and other regions, it might be a different conversation. But U.S. pretty healthy.
Yeah, and so consolidation in the airline industry, and also some business tactics to kind of tame the volatility. You mentioned the points. We'll sell that in the forward market.
Mm-hmm.
I mean, obviously hedging fuel costs, and then the joint ventures point is a great point I didn't know about. But I think a lot of airlines would have really struggled, and maybe some would have gone bankrupt had it not been for the extraordinary amount of government assistance in March and April 2020. Wasn't true. A lot of U.S. airlines got loans literally from the government and then the airlines paid it back immediately because they were able to issue bonds in the markets at a very low coupon. And I would say that the Federal Reserve's over $1 trillion quantitative easing did a lot to assist with that. So Federal Reserve, part of the government. So there's a lot of help that the government gave the airlines as the fundamentals of its business were very, very weak. And I also want to say, because I posted about this on Twitter, and folks said I should ask you about this. To what extent did COVID lockdowns and government mandated lockdowns cause a depression in airline demand, or how much of it was actually, I'm not flying, not because the government's telling me not to fly, but because I don't want to fly. It was kind of natural, private sector.
Yeah, I think so. So the answer to your first question, government aid, yeah. So there's been two kind of major uh, examples of heavy government aid to the U.S. airline industry since 2000. One was after 9/11, and one was during the COVID crisis. So as you said, the U.S. government did step in. Pretty much the whole industry would have been bankrupt in this COVID. The COVID situation was just nothing like. I mean, I remember 9/11. I was working for Air France at the time in New York City, about a mile away from the towers. I remember it very well. It was a very rough shock, but it wasn't that long before airlines were able to manage it. And then there were certain airlines in the world that were doing okay, that weren't exposed to the U.S. or whatever. COVID was something completely different. COVID was just, the whole basically Earth was, air travel just froze. Now, was that because of government mandates or hard to say, but I don't know what the exact reason was. There's I'm sure some people that were willing. There was actually one major market that was open to Americans if they wanted to go, and that was Mexico. Mexico, largest state open. So if you look at, the one, Cancun is actually like the fastest growing airport in the world if you look like today versus 2019 because of all the all the capacity that they were able to add. A lot of Americans went down there. Well, I would say a lot, but it was
No, I saw some op-eds around that period of Mexicans complaining about Americans coming over and working from Mexico, and they'd have a higher salary, and they were kind of ruining the vibe of the neighborhood. So anecdotally,
yeah. I mean, there's that, and that kind of that idea continues with the whole remote working. Is people are doing that now everywhere, and some airlines think that's going to be a stimulant to demand, that all these people now are, hey, we don't have to worry about how much vacation time we want to go work somewhere else. We just go out there and we'll fly. So hard to say. I think these trends are still panning out, but the government aid actually absolutely. Now keep in mind that it wasn't just U.S. airlines that got government aid. It was pretty much almost every airline on Earth. There are a couple of exceptions regionally. Latin America did not generally provide much aid to their airlines during COVID, and so they all went bankrupt. They didn't disappear. I mean, all the big ones. Aeromexico went bankrupt. Avianca went bankrupt. They're the Colombian airline.
So are they now owned by the former bondholders? Bondholders became stockholders?
Well, in different situations, different because most of them, I don't know how many are out of. I know LATAM, for example, is out of bankruptcy. The owners basically, there were some new funds that came in to put in some money, but Delta is, for example, I think owns, I don't know, like a tenth of the airline before, and they still do. So they participated in the bankruptcy restructuring. They reinvested. Qatar Airways is another one that owns part of LATAM. That's the largest airline in South America, and they were very strong before the pandemic, and the government just no aid, so they had nothing, no choice. They had to go bankrupt. And there's a couple. UK, actually, another place that Virgin Atlantic went bankrupt. Now that's an airline that's never really been Virgin Atlantic. Is people kind of think Virgin Atlantic is a strong airline because their brand is very strong, but they never make any money. So
yeah.
But anyway, yeah, it does most. If you go to Asia, if you go to most of Europe, Canada. Canada was a little bit stingy as well, but in general, government aid was kind of it was in all sorts of all different types. There were tax breaks and like I say, great. So in the U.S., we did something where the government actually stepped in and paid for basically assumed payroll for the airlines so that they didn't have to lay off all of.
Was this just a PPP loan times a million, basically?
Yeah, I think so. I don't know if it was
But
precisely
they
part of
weren't
the
paying.
PPP.
They made a very generous loan that maybe didn't have to be paid back, provided people stayed on the payroll, which happened, in many small businesses across America. It's just that this is a huge airline.
Yeah, and I was actually out of the industry during this time, so I don't remember all the details. But generally speaking, the government said, we'll provide this money, but there's different conditions. You can't do stock buybacks. You can't pay dividends. And then the big one was that you can't fire anybody. You had to keep people on payroll. Now they were able to reduce their headcount quite substantially through voluntary separations. So, early retirement programs,
Buyouts.
buyouts,
Yeah.
buyouts. So, but they weren't allowed to fire anybody, which, you can argue that was good policy.
I mean, if you're getting government money, yeah, you strings attached for sure.
Yeah, or even from the government perspective, you don't want all these pilots just sitting idle for a year because they lose their training. You can't just get back on an airplane the next day when you have to go through recurrent training and things like that. So you would have had a situation where the airline industry would have been you know crippled for an extended period of time. So there was probably some good reasons why they did that. Now Boeing actually got a big bailout as well. So it wasn't just the airlines, but across the ecosystem.
And let's move on to the railroads. And yeah, so I just want to say, when it comes, I think your specialty when it comes to airlines is moving people, moving passengers, and then your specialty when it comes to railroads is freight, so not passengers, it's goods. So what are you seeing there? How about we start with the cyclical instead of, we'll talk about the secular trends for rails later, but what was rail demand like during 2020 and 2021? And what does it look like now? Is it a similar story to air or different?
Different. Let me just start by give you a comparison. So I think I mentioned earlier that in 2022, the U.S. airlines earned a collective operating profit of, did I say 5%? I think it was five, maybe four.
You said four, but yeah, 4 or 5%.
4 or 5. I think, did I write it down somewhere? Yeah, four. If I call it four. The rail, the North American railroads, and I cover Canada and the U.S. and Mexico as well, but let's just Canada and the U.S. The collective operating profit was 38%. So you can get a sense of how extraordinarily profitable. I mean, these are Microsoft type margins that you're earning in the railroad industry.
Yeah.
And there's six big ones in the U.S. and Canada. So just to give you a little bit of the structure, there was just one. There were seven. There was just a merger that happened a couple of weeks ago. Actually, it was just finalized
With who?
between Canadian Pacific. They're based in Calgary, and Kansas City Southern, which was based, as you imagine, in Kansas City. So they're now CPKC. That's one railroad now. And so now there's the six big. There's basically two big ones in Canada, two big ones in the Western U.S., two big ones in the Eastern U.S. So that's the Norfolk Southern CSX, the Western guys, Union Pacific, BNSF. BNSF is the Berkshire Hathaway Warren Buffett Railroad. And then you have Canadian National as the other Canadian one. And then you have a bunch of, we call them short lines. There's about 500 or 600 short lines, which are, some of those are kind of rolled up into, private equity. You might own 100 of them or something. But they'll do, we said first and last mile type things. Some of them are tourist railroads, things like that. But the ones that I mostly focus on, the six big guys. So in 2020, as pandemic hits, everybody thinks that the world's going to fall off a cliff. So, business basically stops for a few months, but then it starts coming back very rapidly. The stimulus measures and whatnot. By already the second half of 2020 and certainly 2021, railroad demand rather strong. Different commodities, different trends, but generally very strong. Now, what happened when COVID first hit? The railroads did a lot of furloughs, so they cut their workforce significantly. Then the demand starts coming back really quickly, and they didn't have enough people. And that caused all sorts of service disruptions, a lot of problems. Regulators got upset. Shippers were outraged, contributed to a lot of supply chain disruptions that, you've talked about in your show. And so that was a situation going into sort of 21, kind of remained that way into 2022. 2023 as we stand right now. So if you look at the first 6 months, there's a big dichotomy in railroad demand. So you have some stuff that's just absolutely miserable, some stuff that's holding up rather well. And the miserable, the most, on the miserable side, what's worse right now is what we call the intermodal demand, the stuff that gets shipped in containers. Some of it gets shipped from Asia, consumer goods. Americans are not buying goods anymore. They're buying airline tickets. They're buying services. They're not buying, goods that shipped from built in Asia, shipped over on a, ship and coming into Walmart. And so that stuff is down by double digit. I mean, that's really weak right now. And that's a very different business from that's not a very high margin business. I mean, it's good, but it tends to be the lower margin business for the railroads, the intermodal stuff. What is doing very well, and then there's other stuff that's not doing very, anything related to housing has been having a rough time over the past 6 months. Maybe that'll be coming back now. We'll see. A few others. The stuff that's held up pretty well is, the bulk goods. Coal, actually. Coal is still, believe it or not, the number one commodity. I mean, it sounds like I'm talking about 1870 here, but it's actually the number one commodity in volume terms that the railroads still carry. I mean, it's not intermodal is actually number one, but if you kind of put that aside, the actual as an individual commodity. So coal is definitely on a secular decline, and we're just not using it as much. I mean, you use coal for two things. You use it to make electricity, you use it to make steel. And both of those businesses have held up very well in the past couple of years because of the European energy shortage. There's been export demand. Natural gas prices were very high, so a lot of utilities were okay. Let's use coal. Gas prices have fallen off a cliff, so everybody's kind of waiting for is coal going to start? But we haven't really seen that yet. Another thing we'll be looking for for second quarter earnings season. What's the coal situation for the railroads? I can tell you, another area that's very good is, construction materials for building these giant. I mean, there are plants going on. I mean, the United States is experiencing a manufacturing boom, and we're not seeing it on the residential side. We're seeing the non-residential side. But if you look at the auto plants, the battery plants, semiconductor plants, I mean, these are multi-billion-dollar facilities that are going up across, particularly the southeast United States, Texas. But even Ohio isn't that Intel thing is going up in Ohio.
And do you have an inkling as to why that might be? Is it just sort of secular forces, random forces? Or does it have anything to do with economic policy that privileges or benefits, rewards, reshoring?
Yeah, so certainly that's the couple of trends that everybody's kind of watching. So the railroads kind of have a couple of trends, tailwinds that they're hoping. They're not growing right now, and they haven't been for a long time. Railroads have been shrinking for many years, and they're promising. The problem with when you shrink all the time, the shippers hate it, the workers hate it, the regulators hate it, and everybody's been on their back the past year and a half. I mean, it's just they're hearing it from this Norfolk Southern derailment. We talked about that, but they've just been under a lot of the labor talks that made all the headlines last fall. They've been on a lot of pressure, so they're just promising we're going to grow, we're going to grow, we're going to grow. Couple of tailwinds. So one, you mentioned nearshoring, onshoring. They're hoping that as a lot of manufacturing comes back from Asia, railroads will be in a good position to handle a lot of that. So, and that's, I think, to answer, I'm kind of weaving around your question here, but to answer your question directly, I think nearshoring, onshoring has definitely contributed in a big way to the infrastructure boom that we're seeing. Now, government subsidies as well, the infrastructure bill, the Inflation Reduction Act, which is a lot of climate-friendly energy type infrastructure. So that's definitely been helpful. And a lot of that hasn't really come in yet. I think from what I understand, a lot of the infrastructure spending is still kind of out there. It hasn't really started yet, or not in a big way. So you have all those. The other big tailwind for growth is that the railroads are much more environmentally sustainable than trucks. So you're emitting less carbon. It's very efficient. I mean, if you put like a double stack container on a train, you're shipping a lot of heavy stuff over very long distances. That's a lot of bang rather than putting on a truck, and you're also using the highways, and that's damaging the highways, whatever. So
I mean, a lot of people made a lot of promises about electric trucks. So far, those promises have been a little short in the delivery phase, but that doesn't mean that in 5-10 years they won't deliver.
So that is a very big. If you ask a railroad what keeps them up at night, I think autonomous trucking is very scary. Now there's autonomous trains too, but interestingly, for whatever reason, regulators have looked much more kindly on the truck side than they have on the railroad side. So maybe this is union politics. I'm not sure, but railroads, they really want to move even right now typical train would be two person crews. You have a conductor, you have engineer. They want to move to one person trains, and there's a lot of resistance in Congress. There's actually a bill in the Senate right now that would ban that.
I mean,
You would
that's
not
pretty
be
bare bones. Moving from 2 employees to 1 for
to
a
one
whole line of coal, like it's
on an 8,000 foot train. It's yeah. As someone who's the railroads will swear that it's safe. Now they'll have conductors driving alongside of the train kind of thing. Um, a lot of the technology. This is over my head, but a lot of communications technology is now very automated. And but I kind of agree with you, Jack. I mean, it just as a non-engineer, it sounds it's a little bit much. But then again, nobody in the cab of a truck. Maybe that's a little bit much too. I'm not sure, but that is a concern. Um, Perhaps one day there will be autonomous trucks and autonomous trains. I don't know, but trucks seem to have the head start. Now the technology, as you kind of alluded to, the trucks there hasn't been as. I mean, there are examples of. I think there are trucks in Texas already running autonomously right now, but extremely limited, maybe just on one stretch of a highway between in a place with good weather or whatever in Texas. So we're still a long way from there, but it is a threat.
got it. So there's at least 2 segments. There's intermodal, and it sounds like that's what in the shipping industry is called containers. So those huge metal boxes people are familiar with. And then the second category is just kind of raw commodities and materials. So building materials, coal. So the intermodal is somewhat weak. Is it weak relative to the extraordinarily strong of 2020 and 2021? But actually, it's not it's not bad. It's mediocre, or is it kind of in a industry recession type point? And then is how strong is this second category of raw materials, whether it's building materials or coal or other stuff?
Yeah. So intermodal, I mean, you have to really go category by category. Intermodal is in recession. I don't think anybody would argue that. I mean, I've heard railroads say that, that word come out of their mouth. So that is a recession. There's railroads that their intermodal volumes this year are down by double digits. So it's that's rough. Everybody's kind of waiting for the green shoots, and every now and then you'll hear an investor conference where a railroad or JB Hunt or Schneider, one of these big, these big intermodal trucking companies, they'll tell you, okay, yeah, well, it's maybe we see a little bit of encouraging signs here and there, but nothing really yet. So we'll see about that. As far as some of the construction material, I mean, the railroads will tell you that strength is going to continue because of all the infrastructure spending still to come. We're hoping, the railroads are hoping that housing starts. There's, as we talked about earlier, there's some green shoots there, so maybe that will help. Commodities like lumber is a big commodity that railroads carry. Then you have agriculture, and agriculture kind of you never know because that can right now we're having a big drought in a lot of places where we grow grains. So grains would be like corn and wheat and soybeans, and that stuff is generally pretty good. But I think right now, I think there's a lot of drought conditions that are kind of making that a little difficult. I know the Canadian grain harvest is absolutely massive. They had a fantastic harvest last year, but then the year before that it was really bad. So sometimes it's just nature. You don't know. Autos, very very important category.
Shipping
And
cars.
shipping cars.
Mm.
So they actually will take the cars from the factory, sometimes even from Mexico. That's a big thing now. All the major auto manufacturers, including your European ones and even Asian ones, Toyotas, they all have big plants in a very specific area around Mexico, like central Mexico, where the rail lines run right down, and they'll bring them to the dealerships. And that has been a big bright spot. Now, there's been a lot of growth. Now, that market was depressed because of the whole semiconductor issue
Mm-hmm, mm-hmm.
that I think you've had people on your show talk about that, where The auto manufacturers are still not producing as many cars as they were 2016, 2017, 2018. I don't think that's really gotten back to where it was, but it's grown from the low point during the pandemic for sure. So this year, it's a nice growth driver for the railroad volumes. That's a nice business for them. You'll hear a lot of auto manufacturers and dealers complain that the railroads are not delivering enough. Some of that has to do with, during the pandemic, they got rid of a lot of there's very special cars that you deliver, as you imagine autos on. They got rid of a lot of the cars during the downturn, and now they're scrambling to have enough. So perhaps a car shortage there. I mean, you hear that. But in general, that's another good category. But yeah, steel, I think there's a lot of steel plants coming back to the U.S. And Mexico, Canada. So yeah, it is very much a mix. A lot of goods, a lot of good, a lot of bad.
Hey there, sorry to interrupt. A lot of forward guidance listeners are not into crypto. If that's you, please skip ahead, get back to the interview. Some forward guidance listeners are into crypto. Some own crypto, a smaller percentage owning lots of crypto, and a much smaller percentage work at crypto hedge funds. If you're in those latter two categories, Blockworks Research might be a good fit for you. Blockworks Research is a research and data platform that analyzes governance, tokenomics, and models of interesting crypto projects, including new protocols. There's a lot of edge that can be gained from reading these reports. You can check out a sample report at www.blockworksresearch.com/research and hit the free report toggle. If that is of interest, full subscriptions can be purchased at www.blockworksresearch.com/sign-up. You can also get 10% off using the discount code guidance10. Thanks, and let's get back to the interview. So can you tell us about the consolidation that's happened in the freight industry, the railroad industry? And I mean, 38% operating profit margins, you said that's similar to a cloud business. Those are not something you'd expect from, a railroad. You said that for airlines, it's 4%. How big of a role do you think industry consolidation plays in that? I mean, do you think that it's kind of an oligopoly where companies are kind of making money at the expense of consumers, and also it's the type of thing where if I get charged all this money for an airline ticket, I feel personally aggrieved. Whereas if a company that I buy a product from, if they get their prices raised up from consumers have no idea about freight, because when's the last time an individual consumer ships something on a rail line. Yeah, and I guess we could also just say, as just the businesses of airlines, so many have gone bankrupt, and the stocks have kind of been roughly flat for a decade. With a handful of exceptions, whereas rail stocks and trucking stocks, similar, have been on an absolute tear as profit margins have been very high, and it's been a very consistent business that shareholders have been rewarded, and they reward the stock price. So yeah, just tell us a little bit about those secular forces of consolidation.
Yeah, so interesting anniversary coming up. We're coming up on our 200th anniversary of the railroad industry in the United States. The very first railroad in the United States was in Baltimore in 1828, maybe it was 27, something like that. And some of if you know about American history, the railroads, that was the business for very instrumental during the Civil War, and then kind of in those that second half of the 19th century, this was the biggest business in America. I mean, this was how J.P. Morgan became J.P. Morgan. He helped finance the railroads. This was how modern management techniques came into being through the railroads. I believe like the Penn Central was the biggest employer in the United States for a while. And then the turn of the century, and you start to get airplanes, you start to get trucks, you start to get cars, personal automobiles, and the railroad starts to gradually just to lose a lot of its business. And really by the 1960s, railroads were pretty much on death's door. And so the metaphor for that was the Penn Central went bankrupt, and I think it was 1970. It almost took Goldman Sachs down, by the way. I believe they were invested a lot in their commercial paper, and big thing. The government was very involved in that. And so after that Penn Central bankruptcy, Washington stepped in. They created sort of one big freight railroad called Conrail for the East. It was mostly East Coast. And then they created one passenger railroad, which is the Amtrak. Conrail eventually was privatized. That's kind of another story. But Amtrak, as you know, still exists, still government. But in 1980 was kind of the seminal moment for the modern railroad industry, freight railroad industry. Congress passed something called the Staggers Act, which deregulated how airlines can charge, the prices they can charge.
Airlines or
Did
railroads?
I say airlines? I
Yeah,
do
yeah.
that all the time. Yeah, railroads. I do that all the time. Sorry, but the railroads and airlines, by the way, only they were deregulated in the same period, 2 years earlier, 1978. But we're talking railroads now. So Staggers Act deregulates what they can charge. It allows them to dump some of the businesses they don't with passenger business. If it wasn't making money, they can dump it. They had some track in the middle of nowhere. They were allowed to get rid of it. Um, Consolidation was allowed, probably even encouraged. And then over the course of the next 20 years or so, you had all these just big deals. You just had one very large deal after another.
And so,
You
just
had
didn't you say it was only one company that was privatized? But how was it consolidated? It started as one company.
sorry, so yeah, let me be clear. So the company, there was a company called Penn Central, was a private sector company. Pieces of that were actually taken and formed this new government-owned freight company called Conrail. But competing with Conrail or existing alongside it were 50, 60, I don't know how many other private sector railroads that still exist. A lot of them still struggling. Some of them maybe had niches here and there. We were doing coal from the trucks couldn't do whatever, but a lot of them were struggling. So, so no, I'm glad you cleared that up. I'm sorry. Conrail was just, one. And the reason why they didn't let it go is because, Penn Central was just so big and they were serving a lot of politically important areas in the Northeast and stuff, and there's a lot of unions were involved and all that. So they just created this Conrail company, and then in the during the Reagan administration, I think it was after Staggers Act, you had all this consolidation starting. The government sold; they did an IPO of Conrail, and then eventually it was broken up into Norfolk Southern bought part of it, CSX bought the other part. And that's how it is today. So there's two big railroads in the East today: CSX, Norfolk Southern. But you had just a lot of big mergers. Union Pacific and Southern Pacific, and Burlington Northern and Santa Fe, which is now BNSF, which in 2008 and 9 or something like that. That's when Berkshire stepped in, purchased that. So you just had round after round of mergers, and culminating in the one that just took place in April, as I mentioned earlier, CPKC, which is still the smallest of the big six, but a little bigger now.
So now let's connect it with the U.S. economy. So I know back in the day when railroads were so economically, at the core of everything, people would talk about rail car loadings as they talk now about a purchasing managers index or some sort of economic reading that everyone talks about now. Everyone in 1929 was talking about, if your books about the Great Depression were talking about rail car loadings and stuff like that. I mean, how economically significant is it now, given that the freight business, the container business, intermodal business has been in a recession over the past year, even as the U.S. economy has not. And demand for goods has been high, but companies have been supplying that demand with goods that they have in their back room, and they've been destocking their inventory instead of shipping new inventory. And as a recent author of a book, American Places: A Profile of Local Economies Across the U.S., what are you seeing economically across the nation?
Yeah. So when I talk about some of these trends, the book that I wrote, American Places, that was from 2020. I wrote that in 2021 and 2022. So slightly outdated, but I shouldn't say outdated, but it's we're
On Amazon,
pushing
it
out.
said it came out in 2023.
It did come out in 2023. So it was work it was actually stuff that I published for Econ Weekly, my newsletter, that I published in 2023, but written in 2021, 2022. So yeah, but good question. Clear that up. Yeah. So I think, the two most famous people probably, Alan Greenspan always used to look at rail car loadings. Warren Buffett always says the same thing. And, who am I to question them? But, I think it does probably speak a lot to the industrial and the manufacturing side of the economy, which some people say is still a bellwether. Perhaps it is. The purchasing manager index, you mentioned that. On the manufacturing side, people look at that very closely. So I'm not going to say that it's not. I do want to emphasize, though, that if you look at the U.S. economy today, it's just so service heavy. I mean, there's three sectors that so I call them the three H's. There's healthcare, there's higher education, and there's housing. And those three sectors are so massive in terms of employment, in terms of investment, and also in terms of their inability to really gain any productivity. I mean, it's not easy to extract productivity from those, healthcare, for example. And so I think you get almost a better picture of what's going on by looking at the service sector. In the 08, 09 recession, I mean, the one sector that held up reasonably well was healthcare. And it's like 20% of the economy now. So that was like a very important anchor. And that's doing pretty well now too. Now you had, like, of course, in 2008, 09, you had all these pressures on state, local, federal government budgets. So there were a lot of layoffs. You don't have that today. It's almost just the opposite. It may be coming, but you look at, state and local governments. I think it was on your show, Jack, there was the former president of the Dallas Fed, mm-hmm. Kaplan, who was talking about there's still a lot of money sitting on the accounts of these state and local governments that still need to be spent. I mean, very serious amounts of money, enough to move the economy. So I'm rambling, but it's a long way of saying that I'm a little cautious about saying that just because intermodal rail car loadings are down, that's going to presage some kind of downturn, and it's been like that for, 6 months now. So, where's the recession? Maybe it's coming, but.
So I haven't read Airline Weekly, but Railroad Weekly kindly gave me a Substack subscription to, and it is excellent, in depth. And anyone who wants to learn more about it in depth has got to check it out. You are a very disinterested observer. You're not, selling a narrative of, oh, it's always going to be a recession, or, oh, it's always going to be a boom time. You call them like you see them, and exceptionally in depth. So folks who really want to get in the weeds on the rails should they got to check that out. I want to close out just talking about the airlines. You referenced some consolidation in the airlines and things that airlines were doing. You're talking about your book with Delta Airlines. I mean, how much of a different business is it to the Wild West of the 90s, when companies were going bankrupt every day? And then just tell us a little bit more about the points, about the joint ventures, as well as, is this only a U.S. phenomenon, or are international companies doing this as well?
Yeah, well, the U.S. is unique. That's a whole nother discussion about Europe, for example, is not consolidated. It's very fragmented. There's been some mergers, but still very fragmented. There's reasons for that, which I won't get into now, but unless you want to. But the U.S. airline industry is somewhat unique in that it's very consolidated, and as you mentioned, it is. And yeah, and as you mentioned, Jack, I don't have any. I don't make any forecasts or anything. I'm not. The railroads are not,
Yeah, and you're not even a stock analyst. The stocks to you are all are secondary. You focus really on the fundamentals of the business, which is
correct.
In today's hyper financialist society, and I'd include myself in this. I could tell you what the stocks of Delta Airlines could do, but the fundamentals, I'm not following that closely. You are the inverse period of that, and I think that is a true true like follower of the fundamental business, and that's really important.
Yeah, no, I appreciate that. And also my, the customers that I have are from a wide, don't think of them as just railroads that I have to please. I mean, it's all sorts of everything from analysts to shippers to regulators to whatnot. And on the airline side, I did want to say quickly that, so the airline side, I do work for a company called Skift. I think it's important to plug them as well. Skift is kind of, we call ourselves like the Bloomberg of travel. And they, so I write on the airline side. We have people do hotels. We have two people who do, all sorts of travel.
Yeah, and Airline Weekly is your report that you started, and Skift acquired Airline Weekly. So
that's correct. In 2018, so I started in 2004. In 2018, Skift acquired Airline Weekly, and I'm currently an employee for Skift. So yeah, thanks for clearing that up. So yeah, I encourage you all that. And then to go back to your question, I think we talked a lot about it earlier in the conversation. But I do think that the airline industry in the U.S. is rather healthy. Again, it's not 35% margins. I said 5, but I think it's realistic to think that some of the big airlines like Delta can achieve double-digit margins consistently. You'll have shocks every couple of years. That's inevitable. But if you look over the course of a great way to say it is, if you look at the first decade of the 2000s, absolute nightmare, bankruptcies, constant losses. But if you look between 2010, 2019, very consistent profits, particularly the second half of that decade. Very consistent. You can count on airlines collectively to do, low single digits, uh, you know, high single digits, low double digit operating margins. So I think, and for all those reasons that I told you, there's a lot of structural changes in the airline industry over the course of those years. There's the mergers, the ancillary revenues we talked about, the capacity discipline. We haven't even talked about some of the competitive dynamics internationally. A lot of other, some of the competing airlines went bankrupt abroad and things like that. So a lot of reasons. Planes are much more efficient than they were. Planes keep getting, it's not revolutionary, it's evolutionary, but planes keep getting more efficient. So, it's a technology reason as well. And then, the mileage. I mean, that's always been true with the mileage. Even during the bad days, that was always the crutch that the airlines had. They could sell miles. And, in the US, it's just kind of the scale of these US programs. I mean, I don't know what Delta had. Delta Sky Miles, 200 million people in that program now. I don't know, maybe that's a stretch, 150 million. I mean, it's at least that. Just that's how many, 320 million Americans. I mean, it's a huge, huge number. Whereas if you go over to Europe, the biggest programs, Air France, Lufthansa, 30, 40 million. It's just not on the same scale. So the US are very lucky at that. And, and frankly, I mean, I'm not I don't follow banks, but I'm sure that a company like JP Morgan makes a lot of money on their card, their co-branded mileage card that they have. They have two of them, actually. JP Morgan has one with United, and they have one with Southwest as well. So American Express, their big relationship was with Delta. Citi has American. You can just keep going on. Bank of America has Alaska. You can go on and on. But there's that nice symbiotic relationship there. So I went through, a lot of reasons why perhaps this is not your, grandfather's airline industry. Still a very, 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 very difficult business, though, in the sense that, like I said, requires a lot of capital, requires a lot of labor, always subject to shocks. And we didn't even get too much into it in this conversation, but another reason for the supply shortages in the number of flights, and another reason why the airline industry is, structurally difficult, is because you are dependent on government policy for so much and just government services for so much. So I mentioned how
like what?
Air traffic control.
Ah.
So I mentioned how railroads invest in and own their own tracks. Not true in the railroads. Totally dependent on air traffic controllers. And the federal, the FAA runs that. And air traffic control, the FAA is extremely short staffed this summer, which is why, I don't know when we'll air this, but, we're talking now we're in the middle of, a situation where a lot of people are getting stranded at airports. A lot of flights are getting canceled, and there's blame going back and forth. It's the airline's fault, it's the FAA's fault. But certainly, I think even the FAA would admit that there's a problem there. I mean, there's a serious understaffing problem.
And is that companies have been prioritizing profitability rather than coverage? And I mean, I see Secretary of Transportation Pete Buttigieg on TV, and sometimes I'm in the gym and if there's no audio on, but I just know there's something wrong with the rails or the planes or trains. Something's wrong.
When you see Mayor Pete, there's a problem. The airlines are not running on time. The problem is, I think it seems to be, and I'm not an expert in air by any means. I'm not an expert in airline operations. Should qualify this, practicing medicine without a license here. But it does seem that the FAA understaffing is a big concern. Of course, summertime, you've got thunderstorms and stuff like that. But, I think we've always had those.
Yeah, and this goes to show the difference between the stock price and the fundamental nature of the business. Stock prices tend to be leading. Obviously, the stocks tanked in March 2020, and they bottomed somewhere around the spring of 2020, and they actually started to rally pretty vigorously, and throughout 2021, even as the fundamentals of their business were pretty feeble, as you say. And actually, when the fundamentals started to become good in 2022, that's when they stopped rallying.
And some of that was, I think maybe there was concern. And again, I'm not a stock guy, but I think in 2022, you had a situation of from the spring to the summer, you had fuel prices skyrocket.
Right. Oh
And
yeah.
I think, yeah, and I think a lot of stock investors were concerned about that. So even though demand was coming back, I think there was, like, well, maybe, and it is true that, I mentioned that 4 or 5% operating margin, that was a little bit low for, and I think that a lot of that was fuel. So we'll see
And
how
what
they
kind of
do.
hedging do the airlines do? I know Delta kind of owns a refinery that's kind of a part hedge. Is it true airlines used to hedge and then they kind of abandoned it? Or yeah.
So Delta, as you mentioned, they're very unique because they actually bought a refinery near Philadelphia. Very unique situation. Some airlines don't hedge at all. American won't go near it. They'll, they just say over the long run it doesn't pay. Southwest, very aggressive in their hedging. And then if we go abroad, also a lot of, now if you go abroad, you also start getting into interest rate hedging. I'm sorry, I said interest rate. You do have that, but what I meant to say is exchange rate hedging. So that's a big deal for the U.S. airlines. Don't care so much because international, it's not that big a percentage of their business, and the international demand that exists is a lot of that is U.S. originating, paying in dollars. So it's not, foreign exchange is not too big of a deal for most U.S. airlines, but it's a huge deal. If you're in, I'm trying to think of example. I don't want to say Turkey because that's a unique situation, but if you're in Argentina or, you know, yeah, it becomes a very difficult situation if you're, selling your flights in pesos and all of your costs. Because that's the thing, you're paying your planes in dollars. You're paying for oil, your fuel in dollars. You're paying for your, the only thing you're usually really paying in local currency is your labor. So that's,
But are there some interesting things there, like Turkish Airlines, which I think actually, as a consumer, it has a pretty good reputation. Turkish Airlines. It has some things where it's paying all of its employees in Turkish lira, but it's earning revenues in dollars, and obviously the depreciation of the
euros.
lira would make that a very profitable situation. Is that true or no?
Very roughly, it's a mix between. I mean, there's a breakdown. I was actually looking at this morning. Ironically, it's not Turkish, but there's another airline called Pegasus in Turkey. And off the top of my head, I want to say like a third of their revenues were in euros, another 20% was in dollars, and the rest in lira. And then the cost side maybe is like 40% of their costs were in lira or something like that. So there is, yeah, that can be helpful. Now, Turkey is, we, by the way, at Airline Weekly, my colleague Edward Russell and I, we do a podcast every week, and we talk about Turkey a lot because Turkey happens to be one of the fastest growing airline markets in the world. Turkish Airlines and this other airline, Pegasus, I mentioned, also one of the incredible story. I mean, you probably heard of the Gulf carriers, Emirates,
Mm-hmm.
and growing like mad and ordering planes like crazy. Turkish Airlines is kind of the new Emirates, and in India is another lot of new aircraft orders, a lot of things like that. So yeah, there's all these like incredibly interesting stories outside of the U.S. as well. We focus this conversation on the U.S. for obvious reasons, but yeah, Turkey's definitely it's if you're in the airline industry, you're all over Turkey, right? You're watching Turkey very closely.
Yeah, so people should check out the Railroad Weekly and the Airline Weekly. We'll include links to that in the description. And then, of course, your book, Glory Lost and Found, and most recently, American Places, a profile of local economies across the U.S. Jay, it's been a pleasure having you on. My final question for you is, what do you think is the best run airline operationally, financially, best consumer brand that's outside of the United States?
Oh, outside the United States, that's interesting. So the champion in terms of profitability and just absolute genius business model is Ryanair. They're based in Ireland. Ryanair's just they're incredible about just buying airplanes at the right time, getting good deals. They're traditionally not famous for their customer service, just the opposite. They got a little better, I think, over time. But their CEO is quite a character. His name is Michael O'Leary. Um, just Google him, watch a video. Just don't do it in front of any children because he's got quite a profane mouth. But yeah, incredibly interesting business model where they just really intense utilization of the aircraft, and they pay their workers well. It's not that they don't pay them. It just the way everything's utilized just works out really well. and they take advantage of kind of smaller airports that don't charge as much. And so yeah, that's one that comes to mind. I mean, Turkish Airlines, as I mentioned, is one to watch. And I won't go on any further, but I think if you gun to my head, I'll say Ryanair.
Mm-hmm. Got it. Well, thanks. Well, Jay, thanks so much for coming on, sharing your insight about planes and trains, and thanks everyone for watching. Forward Guidance, the program you just enjoyed, hopefully, can be viewed on YouTube at Blockworks Macro or heard as a podcast on Apple Podcast and Spotify. Episodes are typically released on Apple and Spotify a few hours before they air on YouTube. Please leave a review on Apple Podcast if you feel so inclined. Also, you can get 10% off to Permissionless 2023 and Blockworks Research using code GUIDANCE10. Thanks again, and be well.